A massive $6,000 tax break is heading to over 70 million American seniors. But there's a catch that most people don't understand. In this video, I'll break down exactly what this proposed Senate bill means for your taxes, who qualifies, and most importantly, why this isn't what most news sources are telling you it is. Plus, I'll show you the real numbers and how much money you could actually save. Welcome back to Financial Area, where we cut through the confusion to bring you the financial facts that matter. If this kind of clear, no-nonsense financial information helps you, make sure to hit that like button and subscribe for more money-saving content. Now, let's dive into what's really happening with this proposed $6,000 increase and why it could be a game changer for seniors across America. Here's the story that most people are missing. About a month ago, the House of Representatives passed a major legislative package that included a provision to increase the standard deduction for seniors age 65 and over by $4,000. This was already significant news for millions of older Americans looking for tax relief. But then something interesting happened. The Senate stepped in with an even better offer, a $6,000 increase to the standard deduction for seniors. That's $2,000 more than what the House originally proposed, and it represents a substantial tax break for those age 65 and over. However, here's where the confusion started, and it's crucial you understand this. Many news sources and social media posts began claiming that this was a $4,000 or $6,000 boost to Social Security benefits. This is completely wrong, and it's causing massive confusion among seniors. This proposal is not about increasing Social Security payments. It's not a direct deposit into your bank account. It's not a check in the mail. What we're talking about here is an increase to the standard tax deduction, which is a very different thing, but still incredibly valuable. Let me explain exactly what this means and why it matters. The standard deduction is a set amount that taxpayers can subtract from their income before income tax is applied. Most people opt for the standard deduction rather than itemizing their deductions because it simplifies the tax filing process and often results in a lower tax bill. Currently, for 2024, the standard deduction is $15,000 for an individual and $30,000 for a married couple filing jointly. Now, seniors already get a little extra help. Individuals aged 65 and over can currently claim an additional deduction of about $1,600. But here's what the new proposal would do. Instead of that small additional amount, seniors would get a massive $6,000 additional deduction per person. So a senior filing individually could claim a total deduction of $21,000. That's $15,000 plus $6,000. A married couple, both age 65 or older, could claim $42,000. That's $30,000 plus $12,000. Now you might be wondering, why does this matter more than eliminating taxes on Social Security altogether? Here's the key difference that most people don't realize. Proposals to eliminate taxes on Social Security benefits would only help about 30 million seniors, those who currently pay taxes on their Social Security. But this $6,000 standard deduction increase would be available to all 70+ million seniors age 65 and over who file tax returns. That's more than double the number of people who would benefit. Let me show you exactly how much money we're talking about with some real examples. Let's say you're a single senior with an income of $40,000. Under current rules, you'd get a standard deduction of about $16,600, leaving you with taxable income of roughly $23,400. You'd owe federal income tax on that amount. But with the proposed $6,000 increase, your total deduction would be $21,000. That brings your taxable income down to just $19,000, significantly reducing your tax bill. And if your total income is $21,000 or less, your taxable income would be zero, meaning you'd owe no federal income tax at all. For married couples, the numbers are even more dramatic. Let's say you and your spouse are both over 65 with a combined income of $42,000. With the proposed additional deduction of $6,000 each, your total deduction would be exactly $42,000. That means your entire income would be shielded from federal income tax. You'd owe nothing. Even for seniors with higher incomes, this still provides substantial tax relief. The higher your income, the more you save in actual dollars, since you're reducing the amount of income subject to taxation. Now, let's put this in perspective with what's actually happening to seniors right now. Despite all the political talk about eliminating taxes on Social Security, the reality is harsh. According to the Social Security Board of Trustees' annual report, $55 billion was collected in taxes from seniors on their Social Security benefits just last year. That's $55 billion that came out of seniors' pockets and went to the federal government. This proposed increase in the standard deduction is seen as a way to offset some of this tax burden. By increasing the standard deduction, more of a senior's income, including Social Security benefits, can be shielded from taxation. For many seniors, this could mean paying little to no federal income tax, depending on their total income and filing status. But here's what you need to understand about making this work for you. First, this is still a proposal. It's not law yet. The House and Senate need to reconcile their different versions of the bill, and the final legislation needs to be signed by the president. Second, even if this passes, you'll still need to file a tax return and claim the standard deduction to benefit from this change. It's not automatic, and it's not a check that shows up in your mailbox. You have to take action to claim it. Third, while I'm giving you the general framework here, everyone's tax situation is different. It's crucial that you consult with a tax professional or trusted advisor to ensure you're taking full advantage of whatever deductions become available. This information isn't tax advice. It's educational content to help you understand what's being proposed. Now, while we're talking about maximizing your financial health as a senior, let me share something that could save you even more money right now, regardless of what happens with this tax proposal. Healthcare costs are one of the biggest expenses for seniors, and there's a simple step you can take that saves people an average of $1,100 per year. I'm talking about reviewing your Medicare plan. Most seniors don't realize that Medicare plans and coverage options change every single year. Your health needs may have changed, and you might be eligible for better coverage at a lower cost than what you're currently paying. Here's what's crazy. A simple 10 to 15-minute phone call with a Medicare advisor can help you find the best plan for your needs. Many services offer free consultations where they'll review your current plan and compare it to other options in your area. They'll look at your current providers, your medications, and your coverage needs to find potential savings. The reason this works is that insurance companies are constantly adjusting their plans, adding new benefits, changing networks, and modifying costs. What was the best plan for you last year might not be the best plan this year. And with the average savings being over $1,000 per year, this is money that stays in your pocket instead of going to insurance premiums and healthcare costs. To make this work, here's what you should do. First, schedule a free Medicare review with a qualified advisor. Second, prepare your questions. Make a list of your current providers, medications, and coverage needs. Third, compare plans carefully, looking for the best coverage at the lowest cost while ensuring your preferred doctors and clinics are included. Finally, if you find a better plan, don't hesitate to make the change during the appropriate enrollment period. So let's talk about what happens next with this proposed $6,000 deduction. The legislative process can be complex and unpredictable. Proposals can be amended, delayed, or even scrapped entirely. That's why it's important to stay informed about the latest developments. If this proposal does pass, seniors age 65 and over could see a significant reduction in their taxable income, leading to lower or even zero federal income tax liability. If it doesn't pass, the current standard deduction and additional deduction for seniors will remain in place. But here's something you can do right now, regardless of what happens in Washington. You can make your voice heard. Contact your representatives, share your story, and voice support for policies that provide meaningful financial relief to seniors. With over 70 million seniors potentially affected by this proposed change, there's real power in collective advocacy. And speaking of collective power, this is information that needs to be shared. Many seniors may not be aware of this proposed deduction or how it could impact their finances. By sharing reliable information like this, you're helping others in your community make informed decisions and take advantage of available benefits. The bottom line is this. The proposed $6,000 standard deduction for seniors represents a significant step toward easing the financial burden on older Americans. While it's not a direct payment or an increase in Social Security benefits, it offers substantial tax relief that could benefit millions of people. By understanding the details of this proposal, staying informed about legislative changes, and taking proactive steps to review your healthcare and financial plans, you can maximize your financial well-being and enjoy greater peace of mind in retirement. Remember, this is about more than just taxes. It's about financial security, dignity in retirement, and ensuring that seniors can keep more of their hard-earned money. Whether this specific proposal becomes law or not, the principles remain the same. Stay informed, take action where you can, and don't be afraid to seek professional help when you need it. If you found this information helpful, make sure to like this video and subscribe to Financial Area for more content that cuts through the confusion and gives you the facts you need to make smart financial decisions. And if you know other seniors who could benefit from this information, please share this video with them. Thanks for watching, and I'll see you in the next video where we'll continue to break down the financial news that matters most to you.